Innovation is the only way to win. Steve Jobs said that, with the idea of thinking of the future that's based on innovation. And with that idea, Sri Lanka is also moving on to that idea. And SLASCOM plays a vital role, bringing innovation, improving all aspects of innovation in the country, not only the IT sector, but moving and boosting many other sectors while improving the context of people. More than the content, we believe the context is important. With that idea, we wanted to bring some new aspects, some new knowledge, some with new context improving into the fintech area. As a result, today we are proud to bring these new ideas about the next set of innovation into our financial tech market within Sri Lanka, as well as to understand what type of things are happening in the world in this market. So welcome, ladies and gentlemen. It's a fantastic evening here at Sri Lanka, and thank you very much for joining for this session via SLASCOM. You may be joining and tuning in with us through Zoom, or I can see there are a lot of people joining with us through the Facebook Live. Make sure that you share this page to others so that they will also get benefited from this. Today, we have a fantastic two set of gentlemen who is going to help us to discuss more on these ideas. Basically, we are going to talk about many things in a very quick time scale. We're going to think about where investments are going to go in the next generation, what type of asset classes are going to be in to you. So if you are into investment, if you are pretty inquisitive and want to think how investments can be changed within the next set of generations to come, or I'd rather say next set of months or years to come, you may be really happy to share this live session with your friends, your colleagues. And also, we are going to talk about trends related to investing, digital assets, what's going to happen to the typical traditional methods of investing. Is it going to sustain or is it going to change? And how Sri Lanka as a country is going to absorb these new ideas of new methods of investing, wealth management. These are what we are going to talk in a nutshell. And to do that, and to talk about this, we have absolutely the real or the correct people to talk about that. First, we have Mr. Tharindra Kulasinghe. Tharindra steers the transformation of the entire CAL Group's IT environment, where in the areas of like technology, infrastructure, software, product development, and digital transformation, with a M engineering degree in mechanical engineering and business management, B engineering in mechanical engineering, as well as Prince 2 project management professional. Mr. Kulasinghe has cut teeth his technology companies such as in Millennium IT, now LSEG, of course, and also in Brand Anxiety. And with Mr. Tharindra Kulasinghe, we have Mr. Lalin Dias. Lalin Dias, who is the co-founder and chief executive officer of Yala Labs, which is building the next generation of capital markets infrastructure and helps markets take advantage of cloud, blockchain, and machine learning technologies. Now, prior to Yala Labs, Lalin spent 15 years at Millennium IT, the London Stock Exchange Technology, as product owner and later head of its of trading systems business. Thank you, Tharindra. Thank you, Lalin, for accepting this invitation to share your breadth of knowledge with our audience. I'm pretty sure our audience members who are joining with us live will be greatly benefited from your presence. And before we move into our panel discussion here, let me remind that as an audience member, let's get the best of this session. You are invited to ask questions, clarifications. If you want to challenge the panelists, let's do that, because the idea is to improve our context, which will allow us to have more content and so that we can move to the next level that we are moving. If our audience is ready, thank you very much again for being in this forum, ladies and gentlemen, and we are good to start. In fact, let me go to a few of our questions that we have that comes to our mind when it comes to investing, these new trends, technological investing, about all these new changes. Now, traditionally, we all know about investing. We have a little picture of what investing is, but now the ecosystem is changing. So let me ask from Lalin first. We have seen these new words, a new jargon coming into the market. We all of us have heard very traditional methods of investment, or we have heard of traditional set of type of investors. What are these new interesting new asset classes that have become available for these new investors? We have heard of things called crypto, can be blockchain, NFT, all these new words and new jargon coming into the market. Could you just elaborate a little bit, just to set up, kind of give a warming up to the session, Lalin?
Sure. Afternoon, everyone. So that's I would definitely agree with you, Tina, in that I would say over the last 5 or so years, lots of interesting new options in terms of asset classes have turned up on the scene. Some still sort of, in the early stages of being created. Some have been around for a while. I would think it's fair to say almost all of the new space around asset classes are really revolving around blockchain technology, right, which is now about 10 years plus old, but it has sort of unleashed a whole host of interesting ideas around new assets. Of course, the one we are probably the most familiar with, obviously, is the currency aspect, right? Whether it's Ether or Bitcoin or what have you. So that's the most common. I think everyone's kind of heard of that. So that's the most popular, obviously. It comes in different flavors, like any other asset. So you can buy cryptocurrency as the cash outright. So you physically buy obviously a little difficult to afford 1 Bitcoin, but a fraction of a Bitcoin. Or like any other asset classes, you can also buy the derivative, right? Like a future or an option. So with putting less cash down, you can get exposure to a bigger upside. So you can buy a future, you can buy an option. You can, on the crypto side, there are funds now that just like you have equity funds or fixed income funds, you give them some money and then they invest in a basket of cryptocurrency. So it saves you from having to pick the winners and the losers. And slowly, the investors also starting to put out ETFs, exchange traded funds. So that's just a fund, but easier one to trade. So all of that is kind of wrapped around the cryptocurrency world, right? So if you believe there is value in around, whether it's Bitcoin, Ether, USDC, or all that stuff, there are ways of getting exposure into that. You can physically buy the thing, you can buy a derivative of that, future, an option, you can invest into a fund or an ETF. There are also now, tokens that map the real, like central bank issued money, right? Tether, I mean, you can, for example, buy what they call stable coins, which I'm sure the audience has heard. So you can buy tokens that really track the value of central bank issued money. So US dollars and the like. So generally, that is sort of a ramp into the other crypto space. You buy that not necessarily to get US dollar exposure. You can just buy US dollars if you want to do that. But it's a way into buying the other assets in the ecosystem and to hold value sort of when you sell out. So that's in the currency side of things. But the other interesting aspect around that blockchain has given us is really this whole sort of tokenization movement, right? Which is not currency. It's sort of taking these sort of high value but illiquid assets and breaking it up into into ownership. I mean, so real estate is an example of that. I mean, here's an example, but idea would be like, let's say you buy the New York stock, Empire State Building, and then you break up the ownership of the Empire State Building into, I don't know, let's say 1 million tokens, and then you sell that, right? And then everyone who owns that owns a piece of the the Empire State Building, which means you get some of the rent, you get the capital appreciation, and then you can sell off that little piece. People are thinking of doing it with art. Again, extreme example, but obviously no one can buy the Mona Lisa. But if you did, you could break up the ownership of that into 1 million different pieces, and then everyone can get exposure to that, the value of that going up, hopefully. People are also looking to tokenize a whole bunch of things. I mean, the use case here is illiquid, high value things that it's difficult for one person to own, but you want exposure into this space, so why not break it up? So real estate, art, even sort of industrial machinery, like a fleet of, I don't know, trucks or really heavy industrial equipment. These things are expensive to buy, and their sort of return is daily, monthly, weekly. So instead of one way to finance it would be create a pool, everybody invests, buys this thing, and then you lease it out, and then you get the cash flow back. Now, this is not a novel idea. I mean, in financial services, we have been doing this for years. It's called securitization, right? So that's what's so big about tokenization. The difference here is securitization, like many things in this industry, were really built for bigger investors, institutional investors, high net worth kind of guys, where it made sense to do that. I think most of us on the call couldn't really participate in things like that. What tokenization has done is bring securitization, right? Bring the ability to take big things, break it up in tiny parts, and have like normal people like us own a piece of it. So that's also a very interesting emerging asset class. So we've got the whole crypto space. We've got the whole sort of tokenization of all sorts of things. Early days, very, very early days in this space, but that's kind of exciting, especially as sort of retail investors for us. More options become available. People are also using tokens or thinking of using tokens to represent more traditional assets as well. Like, for example, are we talking about fractionalizing? You take Amazon, right? It costs $3,300, something like that, to buy one share in Amazon. Some people may not have that, right? But they'd like to get exposure to Amazon. So how do you do that? You could, you could just trade in fractions of shares. I mean, you don't necessarily need a blockchain to do that, but that's another sort of, a use case. And interestingly, the technology itself has become somewhat of an asset class as well, in that you can invest in the projects or in those companies, people that are building these, layer 1, layer 2 platforms, the companies. That is in a way one, those days used to be called ICOs and then IEOs and then STOs, all just fancy names, but essentially investing in the project or investing in the company or the product. In a way, that's an asset in itself. So those are kind of the the interesting things pre-NFT, right? And then I think the last 12 months, the non-fungible token space has really got really very hot. I'm sure everyone's heard of that. That's a relatively recent phenomenon. I mean, at least for me, last 12 months, 18 months, it wasn't something, at least was on our radar, and even early last year. And that is a little different from the other things we talked about, in that it's a bit of a flip. By definition, and a non-fungible token is unique. It's a one of a kind. You're buying a one of a kind thing. So you're not buying pieces of something that's fungible. You can't put them together and make the Empire State Building. You're buying one of a very, very unique thing. So it's usually art. I mean, art in a visual sense, usually digital art. But people are, certainly one of our clients is using NFTs in the music space. Big bands are issuing tokens which give you like access to front row seats in the concerts, and special releases, music. So basically artists, whether it's visual or in any other kind, and sort of memorabilia, like I think Dorsey sold his first tweet and things like that. So that's becoming an interesting space, little different from a traditional asset, because it's art, right? It's not fixed income or shares in something or currency. It's you're getting exposed to the art market. But in an age where central banks are pumping all sorts of cash into the system, that's not a bad bit of exposure to get into. So that's the other interesting space, the NFT space. Still very early days, but the other, I think, really explosive area within the NFT space is in gaming assets. And I'm very boring mid-40s guy, so I don't play a lot of games anymore. But a lot of the newer games are obviously in the metaverse, and a lot of the commodities trading there are probably going to be NFTs. Special skins, weapons, cracks into get you into level 3. Communities around. So that NFT space definitely is hot. It is an asset class for sure, as is currencies and the rest. But I mean, like all things, we are in the early days, right? It is somewhat of the Wild West. Most things won't work. Some things will work really well. Difficult to tell what is what just yet. But if you are an investor, some portion of your portfolio probably needs to be in this space. You must decide what that portion is. But it is it's a thing. It's not something to be ignored. That's kind of it all built around the capabilities we got with blockchain. Really, those are the interesting new stuff that's happening, that at least we are seeing.
Thank you, Lalin. I think you're saying the times are changing, and we better be ready for that. Rather than being sorry. Tarinder, would you like to add on that point? I think Lalin was talking more on sense of Bitcoin, blockchain related technologies. We have heard of other methods, other techniques as well, other asset types as well. Anything to add, Tarinder?
Yes, thank you. So good evening, everyone. What we've seen from actually a lot of this interest that's coming through for the new asset classes like Bitcoin and blockchain technology and tokenization, it's actually creating a lot of interest in old asset classes that have been around for a long time as well. So what it has actually opened up people's eyes to see what else can we invest in, what else are options, what are more legitimate actual ways maybe that can be where we can make more money in. So like Lalin mentioned, I mean, fractional investing is a huge segment right now. And particularly in real estate, the idea of being able to get into a big ticket investment, i.e. like Lalin's example of buying a building in New York, is not out of reach for a typical beginner investor now. So, and you don't have to deal with all that paperwork or the hassle of actually, visiting a property. You don't even have to live in that country or that area to get access to that investment. So, and that model, I mean, is getting replicated without the use of blockchain as well. And whether it's antiques or gold, I mean, these are investments that, typically maybe a few years ago, we wouldn't even really consider. a typical retail investor. So now even if you want to invest in gold, there's an app for that. So a lot of old-fashioned asset classes are getting repackaged, and particularly with added user experience and accessibility, it's getting more and more attractive for retail investors. Globally, we have noticed over the last couple of years huge interest in the equity markets. I mean, everybody must have heard about GameStop, the GameStop saga, where penny stocks and a few other penny stocks just purely blew out, based on speculation. And technology had a big part to play with that, particularly with apps like Robinhood, which we'll touch on later on as well. So, I mean, right now, as we speak, the US markets are at a record high. So there's definitely, I think the pandemic and, like Laling mentioned, a lot of cash flowing around, pumped in by the central bank as well, flowing in the system. So a lot of the existing asset classes being looked at through new technology and new eyes. Talking of existing asset classes, I think everybody must have noticed, especially if you watch the IPL on Indian TV channels over the last few weeks, the amount of advertisements for mutual funds. I mean, it's every other advertisement, it's a mutual fund. So, I mean, there's actually a reason for that. Right now, the market size of mutual funds in India is 33 trillion Indian rupees. So it's about $500 billion. And the even bigger fact is that it doubled over the last 2 years. So it's growing phenomenally fast, one of the fastest growing South Asian fund management markets there. And mutual funds has existed for the last, how many, 30, 40 years. So it's not a new product, and it's getting repackaged with technology. It's becoming more accessible. And a lot of people are getting more aware of these investment products out there. And definitely the market is driving this. The people are more financially savvy, and they want more investment options. So whether it's crypto or whether it's existing asset classes, technology is kind of definitely democratizing the access to all of this.
Thank you, Tharendra. Just to let you know, Tharendra, Laleen, there are a bunch of absolutely interesting audience with us. There are questions, comments, challenges pouring in your way. So there will be a interesting question and answer session probably once we are done with the sort of initial handshaking here. You mentioned, Tharendra, about some of the new concepts, like some of the apps you mentioned about something like Robinhood. These are, I believe, some emerging trends that are happening, not probably in Sri Lanka, but outside the Sri Lanka. So what are these sort of emerging trends that you have seen, that how people are, going about investing and managing their wealth at the moment?
So what we are saying, Tilna, is basically, all of these technologies, essentially, like I mentioned before, it's democratizing access and giving us more and more options to invest. And one of the big things that's driving this is user experience. If we take the example mentioned earlier, like Robinhood, so basically it's a equity purchasing app with zero fees. And the user experience is like, it's like the invest now to make 10x. There's an element of gamification involved in that. And if you compare it with a typical, let's say, stock brokering app that was issued 2 years ago by Goldman Sachs, for example, or some other stock brokering firm, you'll just be bombarded with charts and, reports and research reports and things like that. So, and it wasn't really appealing to anyone to invest in any shares. But right now, people, I like Tesla, I want to buy Tesla shares. So, so that's driving a lot of the market right now, and the applications and all of that that's coming in is supporting that. So the retail market is heavily buying into this segment because the middleman is kind of now disappearing from it. So it's very interesting to see. And then there's element of also where people want to learn and kind of follow experts and look at experts at what they are doing. Or so applications like social investing applications like eToro. So basically you can follow an investor who's making money, and they will share their trading strategies and their methodologies with everyone. So, I mean, again, there's element of risk involved. Experts can get beaten by the markets anytime. But again, there's things coming into the market where you don't have to necessarily be expert. I mean, back then, you know, if you wanted to trade stocks, you know, you probably have to know how to read the Financial Times. So now that's not really necessary. I mean, there's products like ETFs, index tracked funds, where, you know, these particular sets of equity shares or funds follow an indices or a sector. And you just need to invest that in that particular set of stocks or that fund, and it tracks the ASPI or the you know, Dow Jones or something like that. So you don't really need to do much. If you think the stock market is going to fly next week, you just put your money in there and you know, to see what happens. So again, that element of education and awareness brought in through all of these applications also is driving the market. And again, like I mentioned before, existing products being repackaged by technology. It's also, again, not repackaged by technology, repackaged by user requirement. Like now, for example, if you really look at why we want to invest or why we want to make more money, it's always some kind of goal behind it. So investment, goal-based investment is a big thing. So it's one of the things driving that mutual fund market I mentioned in India as well. So basically, I want to maybe save up for a trip in Japan or my honeymoon or to buy a car or house. And I'm here now. This is what I need to do to get to that point. I don't really care. I get, you know, annualized return of X% this year and, you know, all of that. So basically, it's also kind of simplifying that process of investing. So a lot of that product, a lot of those products are being repackaged in that sense as well. So yeah, I think behind all of that, there's a lot of technology that's driving the management of these retail funds. So whether it's machine learning or AI, that's bringing in a lot of expertise from around the markets and, you know, consolidating them into one place.
I like the fact, Tarinder, that most of these new trending mechanisms are removing the barrier of entry to non-finance people. So, you know, people have been thinking about these kind of things as finance-related knowledge is absolutely required. You should be able to read a lot of big charts and a lot of things. But I think what I understood is the barrier to entry is now mostly marginalized, and even normal people can start working on this. Before moving into Lalin, I must put a little disclaimer here that our panel of members are not advocating or advising you to invest in these things by any sort. This is, as I said, is a discussion on improving, I would say, you know, enlarging our capacity of thinking so that you know about these things and you know what to do, because we are all intelligent people here who knows how to take our informed decisions. Lalin, I'm pretty sure you have more to add to my question.
I mean, just to sort of add to what Tarinder was saying, I mean, I think sort of zooming out, you know, we started talking about new asset classes. Obviously, it doesn't mean you should invest everything or even something that each one must decide. You must look at the full universe of things and then decide how much to put where. But you know, so zooming out a little bit, I think in general, I think over the last, you know, again, five odd years, more and more of us, and when I mean us, I mean retail, right? Retail investors, more and more of us are starting to, I think, realize that, you know, touch wood, we have a decent chance of making 100, right? In terms of lifespan. And I mean, a good quality of life. I mean, if you can imagine the kinds of things medicine specifically, we'll be doing over the next 30, 40 years. I think we have a decent shot if we keep our mind and eat right, exercise, and all of that good stuff. We will have a good shot at reaching 100, right? And a good quality of life. The problem is, can we afford it, right? And I think more and more of us are starting to think. I mean, I realized this quite late in my life. I wish I had realized this in my 20s, but starting to realize, you know what? We may be around for a lot longer. Our pot may need to be larger than we thought it needs to be. And I think as more and more people have realized that, more and more people have started to get interested in, I need to do something. I can't just sit around and, keep stuff in savings accounts. Now, again, we're trying to think there's sort of two approaches to investing, right? One is an active approach. And that is where you really have an interest or a skill or the time, or probably all of them, to, do the homework and judge for yourself. Yeah. So you decide what to buy, when to sell it or not to sell it, and all of that stuff. The other track, which is probably most of us, is, look, I don't have the time, I don't have the skill, or frankly, I don't have the interest. Stuff's boring. I mean, I'll be honest, I live in this space, but it's, you want to spend your free time reading about these things? I mean, come on, you've got better things to do, right? The other approach is the passive approach, right? Which is, essentially, people have all sorts of fancy names, but it's essentially you pay someone to manage your money. You're like, okay, here's a bunch of cash. You're smart. Just do better than I would. You have to pay for that. You have to pay a fee. You pay for everything. That's perfectly fine. You have to pay for that. But you let smarter people, or people who are experts, manage your money for you, the passive side of things, right? And that's kind of wealth management. That's what wealth management is about. So the trend, I would say, over the last 5 to 10 years on the wealth management space is, in the past, it's been a service, let's be honest, that you have to have a fair amount of cash, right? You got to be a fairly wealthy person for someone to manage your wealth, right? It's not something most of us, that's if you have hundreds of $1,000s, you're going to find people who will invest that money for you. But if you've got $1,000 or $100, you're on your own, right? No one's going to tell you where to put that. You've got to figure that out yourself. But now, so over the last 5-10 years, these sort of, the term they use is robo-advisors. It was a bad term. I mean, who wants robots to manage your money? But it's not really robots. It's what they've done is they've digitized the workflow around wealth management, right? What they've done is look, this is a work in progress, right? We're not fully there yet, but the idea is take all of that great skill set that was around managing rich people's money, and how do you scale it to retail, like regular people like us? Because obviously, before we had the technology, it didn't make sense. I mean, if I had $1,000 to invest, why would some really smart guy spend his time on me or her time on me trying to manage my $1,000? And if I had $1 million, that's a different story. But now, so the idea around the whole digitization of wealth management is how do you bring that great skill set into a scalable proposition for retail? And we are in the industry getting there now, right? In two ways. One is, again, all these tools, like Tharindra was saying, existed, right? So essentially how it works in a robo-advisor is some smart chaps, hopefully, devise these portfolios. So let's make it up. Let's say it's 10 portfolios. It's portfolio 1, 2, 3, up to 10. And each have their balance on the risk reward. Here's really conservative, largely fixed income, probably won't lose your shirt, but don't expect a great return. Here's on the other side, all this crypto stuff. You got to have a really strong stomach. You have a decent chance of losing everything, and a small chance of making a huge amount. But they've done the work, and so they'll continue doing the research. Okay, that's the one to buy, that's the one to sell. Essentially, you give them money, and they invest it, and so they give you some buckets to pick from. You probably wouldn't pick one bucket. You'd put a bit in one. You'd spread it across. You diversify, right? Always diversify. Put a bit here, put a bit there. So packaging all of that is has become a thing, and it's still early days. And that's, I think, it's been quite exciting that any of us can go pick from those portfolios. The second innovation has been about how you get cash to them, because again, it's really, in the past, giving $10 or $100, it's a small amount of money for them. It's like been a nuisance, right? How do you get? But if you add it up, if 1 million people give $100. That's a lot of money. So there's been a lot of innovation about how to collect the funds from us. So obviously you can transfer it digitally now. That's been around for 10 years. But also things like you can set up every month deduct so much. But interesting things like linking to your credit card, right? Hey, every time I spend, Acorn does that, right? Every time I spend, I don't know, I buy coffee for $4.99, 5 cents goes into a thing. Or I see something, say shop, go on holiday to some hotel, get 20% off. Actually, that 20% off, not in cash, stick it into my investment account. So it's automated, right? That's a robo-bit I get. So that's been a great, for retail investors, that's been a lot of very interesting workflow and digitization happening there. Helping us pick, okay, look, so we just say things like, this is my goal. This is how much money I'm trying to, to buy a car or what have you. This is my time horizon. This is my risk appetite, probably diversify a bit here. And then you just go. And hopefully they do a better job than you can. And I mean, most money in the world is managed like that. I mean, institutional money is passive. I mean, very few people actually spend the time to decide when to buy and sell something. Most money is managed by institutions. Now we have come up with the ability to scale that to retail, which I think is extremely exciting, especially as I say, hope to live to 100. I really do hope some smarter guys will be managing my money. I'm not particularly smart about managing my money. So that has been quite exciting. I think, and in Sri Lanka, not a lot has happened there yet. From what I live here, so I can say as a customer, no one is so far offered me that service. If they do, I'll sign up. So for me, there's a lot of inspiration you can take. I mean, last 5-10 years, that's really taken off in sort of other jurisdictions. So yeah, I mean, that's quite exciting. And so that sort of deep integration between your savings and investment accounts, right? I mean, that's you can see that happening. You can see there will be a bot that will tell you, hey, Lalin, what the hell are you doing? You've got a lot of, well, hopefully a lot of cash sitting in a savings account. We know how much money you spend. What are you doing? You need to move that. Oh, okay. Like a little nudge. I'll be like, oh, well, yeah, sure, go on. Let's do that. Or even worse, you fool, all your money is in a current account. There's no interest there. What are you doing? You only need this much. Press a button, boom, it goes into one of these funds. You can see that that's happening. It's it's going to happen. So for me, that's a very exciting trend as an individual. Us getting better access to that skill set is quite exciting.
One of my university lecturers once used to say that most of us have seen too many movies, and these kind of things we have seen in too many movies, but things are now becoming real. Lalin, I believe that things are happening right now. So this is a kind of a test run to make sure that everybody knows about these things. So things that Lalin is talking and Tarinder is talking are not anymore in the movies, but it's still, I mean, it's already happening. But I'm a bit interested in this idea because I'm personally being a non-finance type of a guy. What I'm hearing from both of you is that although these kind of new things are coming up into the market, the fundamentals of fundamentals of investing and risk reward appetite and everything, these are still there. And that doesn't change. That's what I'm hearing.
Nothing. Yeah, I mean, it's those concepts are, I mean, almost universal. It's just you have new things to think about investing in. You may choose to, you may not. That's up to you. Absolutely. And you have new ways now of doing it. And it's like we've got to look at our wellness in a financial sense as well. We've got to be physically well. We've got to be mentally well. As I said, eat your vegetables, do exercise, spend time with your family and friends. Don't be on social media too much. That's all lovely, good stuff. But we need to be financially well as well. And help, I think, is on the way. Most of us, myself included, I find it utterly uninteresting, some of this stuff. I wish I could give money to someone and let them do it. I think help is on the way. That's what we see from our work. Yeah.
I appreciate it's absolutely great news to almost all of us. Now, you both were talking about a lot of new technologies coming into this market and trying to change how people are doing this stuff at the moment. Basically, I think the technology is going to help us, people like us who probably doesn't have much knowledge on doing these things, to do this better, or people who have not been doing this because they didn't know the jargon to have these things better. So this all technology coming into the market. We have seen, I mean, even in Sri Lanka, we have seen some of the banks now slowly getting into the rally. We have seen things like KYC coming into the open banking methods, open banking APIs coming into the technological area, fintech industry booming up in industry. So there are these multiple trends, technological trends coming into the market. Tarendra, what do you have to say about this technological infrastructure emerging with this wealth management and this trading space?
Yes, sir. So definitely there's a lot of fundamental shifts that happening in terms of tech infrastructure that's kind of driving wealth management, especially in terms of adoption and the access. So going back to some of these terms you mentioned, like open banking. I mean, this is a huge driver in developed markets we are seeing, where banks can communicate with each other and share information with each other seamlessly. So this opens up a lot of opportunities and the opportunity to work very much efficiently and to what we call create a more efficient market, a financial market. So this itself, and let's face it, nobody wants to go to a bank anymore. I mean, even if you, the idea of standing in line for something now is, other than it's for Starbucks, it's, nobody wants to really do that and fill in and sit down and do paperwork. So the combination of these technologies combined with things like digital ID and digital KYC, you no longer need to do that. If I have signed up with X bank, why do I need to again go and do the exact same process with bank Y? Why cannot give my consent to bank X to share my details with bank Y and make it a more seamless process? So all of the technology is slowly now starting to take place in especially our part of the world. It's pretty much established in Europe and the US, and this is, creating an industry on its own now. I'm sure everybody must have heard of neobanks. So these are banks that really don't have any physical presence. So they are just entirely digital. It just lives in the cloud. So and they have a huge presence right now in Southeast Asian markets, particularly in Indonesia and Vietnam. And the regulation has really catered for that, and they're doing a massive service by actually helping the unbanked, where there are huge populations of unbanked people, and but all of them have mobile phones, so it's pretty much a no-brainer where these technologies can thrive on. So that's one aspect of it. And again, coming back to the open banking and similar kind of national level technologies. Again, I'll go across the pond to bring up another good example, the India Stack. So basically, this is a set of layers of APIs that the Indian government has institutionalized. And this involves KYC and payment APIs, as well as their national ID, the digital ID Aadhaar. So it interconnects all of these financial entities, banks, merchants with all the consumers. And I mean, this is one of the reasons that the end product is this booming mutual fund market, for example. This is that is a very good example of a combination of regulation combined with national level technological infrastructure really driving a more efficient market and providing more access to people and providing access to more services. So this gives the opportunity to just not stick with the traditional services as well. It gives the opportunity to innovate more and to be more flexible as well. Now, in terms of particularly digital KYC, this gives the opportunity to sign up for products that normally you wouldn't typically sign up to. It creates a lot more a dynamic market. It kind of brings down the barriers of this monopoly kind of environments where unfortunately banks seem to thrive on in certain environments. So the market is definitely demanding it, and I think there's a huge push in terms of national level infrastructure which is required to get to kind of jump that next to that next step in financial inclusivity and openness.
Lalin, while I'd like to also give you ideas on that, I have another question. I just get this. So I have firsthand experience that some of these kind of technological trends, we are not the first to experience. Probably typically what happens is some European country would implement that, and obviously we will catch up with that. We will pick up that. I'm pretty sure you have more experience on that. I'd like to add your ideas onto the same aspect. What are these new technological infrastructures that are emerging, as well as do you also agree to that idea, like, most of the time things will happen in the West and then we will pick up all these things? Lalin?
Yeah, look, if you're honest, we'll have to, that is true. We will have to concede that. Not necessarily a bad thing in that sometimes it's perfectly fine not to be first. Then you can figure out which ones work and which ones don't. But one must keep an eye on what's happening elsewhere, and then pick up. What, this is a thing. Let's get into it. I think it is true in the past, perhaps because there were more mature markets. There's a lot more wealth there. Europe, the US was where a lot of innovation used to happen. Still the case, but as I think Tharine has also pointed out, Southeast Asia is East and Southeast Asia is a place where there's a lot of innovation happening as well, and another place to keep one's eye on and learn from. I think I agree with Tharine in that digital KYC, open banking, those are the base layers, right? Very difficult. It's difficult to say that. It's difficult to debate the importance of that. If you're watching what's happening elsewhere in the world, there's no debate about it. It's like debating if the world is round. They are important, and whenever they have been implemented, they unleash a whole host of innovations that really benefit the customer. So there's nothing to debate there. It's just a question of when and how to do it. So absolutely agree that those two are the base layers. I guess we've talked about blockchain quite a lot here. That is, look. Like any new technology, sometimes it's used for good, sometimes it's used for bad. Blockchain has absolutely been used to do all sorts of fraudulent, really dodgy stuff, for sure. Sometimes people are trying to use it when it's not, sometimes it is a technology in search of a problem. So definitely, like, this is the thing about the Wild West. When you start, you can't quite tell what's what, but you can tell it's a thing, right? And it's now we are starting to see which cases make sense and which don't. So that whole decentralized, disintermediated experience, the Web 3.0 thinking is, kind of rooted somewhat in blockchains. It's a thing. We can't fully definitively say, which of these will work, which of them won't, but it's going to be a thing for sure. And something to watch out on. The other thing that's, again, over the last, I would say, 18 to 24 months, bubbling up is this whole concept of what I call CBDCs, the central bank issued digital currencies, right? Why buy a token that represents the US dollar when you can actually buy a digitized form of the US dollar? Obviously now it's East Asia, right? China is by far the head of everybody else. Everyone else is doing white papers or experiments. In China, they're rolling it out they are way past POC phase, right? And that's a thing to watch for sure. Broadly speaking, there's money issued, essentially created in the banking system, and then there's central bank issued money. And central bank issued money right now is cash, physical cash. There's absolutely a good case to be made that some of that central bank issued money should be in digital form. Well, it makes perfect sense. That's a trend that seems to be playing out, and could have interesting. They would give all these international payment networks a good run for their money, Visa, MasterCard, and the like, because if you can digitally transfer cash, well, why would you do anything else? Early days still, but definitely something to watch out on. I mean, I think, yeah, that nothing much more to add than to what Tarun was saying. But yeah, I mean, look, I do agree. We're not always the first, and that's okay as long as we catch up and move beyond just saying we want to do it and actually do it.
Yeah, I think things are moving fast, and we need to, sometimes things will, things will be completely positive or things will change. However, I understand this industry is not that fast in, not a negative thing, but we are catching up in that sense. Yeah. So things are evolving. So it's I mean, for a person like me, what I have heard so far, what I have heard about investing is, you have some money, you want some return, you talk to some person who knows about things like a broker or a middleman. So my question is this: now you are talking about all these good new things like apps and technologies and things. What's going to happen to these middle people, like the brokers and these middle sector?
Well, that is I mean, look, if you look at what is Web 3.0, one of the key things there is, more decentralization, disintermediation, right? I mean, fancy ways of just saying, cut out or less involvement of the middleman, right? Let's be honest. Yeah. So look, I mean, but this is not new, right? Any industry, we are talking services here, but whether it was agriculture, whether it was industry, whether it was services, you have to add value to whoever you serve, your customers, right? And over time, what you did that added value won't continue to add value. Things will automate, and that's good. I mean, look, as population growth slows down, we need to be more productive, so we need to automate a lot more. So yeah, look, I mean, it is a challenge. I think the 2008 financial crisis didn't help, right? I mean, there are lots of people pretty, unhappy with the traditional players who took a lot of risk, didn't quite pay the price for that. So the brand, that the incumbents took a big reputational hit amongst us on the retail side for sure. But look, it's their game to lose, right? If you think about it, in any industry, not finance, any trend, the incumbents have it all, right? They've got the brand, and this is money, right? Brand really, I mean, you're not going to, we're going to trust your money with, right? So brand is really important. They have the brand, they have a customer base. I mean, any of us building new things will tell you it's not easy to acquire customers. It takes a long time. So incumbents have a brand, they have customers, they have cash, they have know-how, they have deep domain. They know their industry better than anyone else. They have the regulatory connection, right? They have the license, they know how the regulators think. They have it all. So why is it that they're never the guys who do it? Because unfortunately, there's one Achilles heel, and that's culture, right? They have it all, and that's the problem. That they don't quite culturally, because these are big beasts. They don't move fast. They start, as they, whenever these new trends come, they first, as someone said, you ignore it, then you laugh at it, and you start to fight it, and then you lost. They're in a really good position because they understand customers, but culturally, it's an age-old question, right? Why is it that upstarts always come and sidewhack all these incumbents? Culturally, they're just not there. So look, nothing new. They need to watch their back. But I mean, they have everything they have at their disposal to end up much better from this process. They just have to culturally maybe realign themselves a little bit.
Absolutely. Tarendra, I think you represent CAL also. So what I'm hearing is the boat is already sailing. What do you have to add here? I mean,
it's not looking good,
don't you feel like challenged?
No. I mean, I'm speaking for CAL. I mean, we are very well aware of what's going to happen, and we are embracing it. I mean, we are trying to at least. And it's like Lalim mentioned, it's a situation where it's culture. It's kind of a David versus Goliath situation happening as well. If the regulations allow it. So so it's very traditional, particularly if you take into the Sri Lankan context, the banking industry and the brokering business. It's extremely institutionalized. It's very traditional. So it's definitely dragging its heels. So when it comes to these kind of endeavors of embracing technology, but it's happening, and it's a kind of a slow big wave that we see is rolling on. And any business that involves in advisory, particularly financial advisory, is going to get disrupted. It's just a matter of time. So anything that involves advisory, because it's essentially down to your decision making. So how quick and how well you can make a decision. Coming back to the things like robo advisory and things like that, it's just a matter of time that all of these technologies will ultimately replace a broker with a metaphorical robot. But human intuition will always play a part, particularly in markets such as volatile, like in Sri Lanka. I mean, like if the market is small, and if it's not well developed, if it's not really efficient, there's a lot of other factors in play, and that always requires human intervention and human intuition. So, but it's changing globally. Automation is coming in, and it's something that we are embracing at CAL as well. I mean, we are trying to adopt as much as possible to this. We are innovating. I mean, the recent more example is that we just completed our second IPO that we completely did digitally. I mean, of course, we had to have taken physical applications, but we discouraged it. So and if you actually look at it, it's kind of eliminating certain jobs. Company registrars don't like it. Because it's pretty much their job. We have automated with 2 web pages and a digital signature. So again, it's a shift happening in the business, but there's resistance also from certain sides, but it's going to happen. It's a matter of time, and globally we will have to adapt, and the regulations will need to accommodate for it.
Yeah, I mean, it's about adding value, right? And you need to do that. I mean, look, the incumbents have great depth of knowledge in how to invest, right? I mean, they're doing it for people with lots of cash. They really need to turn that now into a product that all of us can use. And I mean, they'll do really well from that. I mean, you imagine, a million guys with even $1,000. That's a lot of money.
Yeah, absolutely. I think you brought a great analogy. I mean, we all love to argue on the fact that creating vacuum cleaners will give away the houseworking little maid's job, but we all love to buy a vacuum cleaner. That's the ultimate decision, I think. I'd like to invite all our audience members to pose any of your questions, comments, any challenges to this gentleman. We can have a little few minutes at the end. We are coming to the final round of questions. Now, all this is fancy. All these things are already happening. I know most of the things are happening at the outside our territories. But what's actually going to be within Sri Lankan domain? What's the actual reality here? What about the regulations? Is Sri Lanka ready to accept this? I'm pretty sure there are a lot of regulations tightly coupling into this area. And is it too much? Is it happening? Where's Sri Lanka's footprint in all this discussion, Tharinda and Lalit? I believe Lalit can start.
I guess Tharinda will have a sort of greater insight to the regulatory side. I mean, I can just speak as an individual. Look, we have a closed capital account, right? I mean, I've talked about lots of very interesting assets. It's very difficult to, amount of times I put my credit card into some of these things and it doesn't work. Look, we've got a closed capital account. We are locked out of some of these opportunities. Let's be honest at the moment. I think, I mean, I talk a lot about crypto and assets. I don't have a huge portfolio in that space. I'm very traditional, but there's peer-to-peer trading from if there are existing people who own some digital assets, there are peer-to-peer markets where you can buy some of that, and then that's like an on-ramp into the crypto world. But look, like I said, I'm not advocating. You have to do your homework or find some smart institutional investor who's done their homework and give them the money. But look, we have a closed capital account, so we are locked out of some opportunities. There's no there's no point beating around the bush on that front. But There are things we can do around, wealth management. How many people still have money in savings accounts? I mean, come on. You just put it in a unit trust, you'll get a better return, right? I mean, I can just tell you on a personal basis, I don't have any money I have money that I can survive a month on. Everything else is in a fixed income unit trust. I don't care if it's even 2% more, it's 2% more. But it's not digital. I got to send emails, fill forms, it's a nuisance. But there are lots of things we can do, even in a closed ecosystem, to help. Because look, like I said, people are going to live for a longer time than we think. We really do need to start building our nest eggs. I mean, I think Thainda will have probably a lot more insights than myself.
Thainda?
Yeah, I mean, I spend a lot of time getting frustrated by in that sense. But yeah, I mean, it's again a situation. I don't think there's definitely more of it here. I mean, we definitely require a lot more flexibility in terms of regulation here. And I mean, in one end of the scale, I mean, there are things happening. I mean, last year, we recently introduced the Sri Lankan FIU introduced a non-face-to-face onboarding, so which allowed digital KYC. So which was, again, a great positive step. This year, I believe I saw the legal system starting to use digital signatures, although Cal implemented it 4 or 5 years ago. So, there are instances where there's plenty of, I think there's a project on digital ID that's happening. I think Lalin, yourself, you were involved in some POC activity with the central bank on KYC. So there's a lot of activity happening, and there's hope, but there's definitely, I think the industry and the regulators definitely both need to come together and look at a roadmap, because essentially it's still siloed. I don't think there's still a cohesive roadmap of where we need to get to. So there's good examples, but I think in terms of opening it up more, we definitely need to, there's a lot more work to be done. I mean, people in Sri Lanka are becoming more and more financially savvy. That's happening as we speak. So they want, I mean, given the current economic situation, like Lalin said, if you get an extra couple of % more, people would love to do that.
Yeah,
that's a no-brainer. Like unit trust funds, so people, what we have seen at Cal more and more, especially during the pandemic, we have seen more and more customers coming in for our unit trust product. So I mean, we have, I think in the banking sector, about 5 or 6 trillion rupees tied up in fixed deposits. So and I mean, and that's giving you a very low return compared to other alternative products available here in Sri Lanka. So again, there are options for customers, and there are now the regulations have allowed accessibility for them. So for our unit trust product, coming back to you, Lalin, you don't need to send us emails. You can sign up for us, use a portal to do all of your transactions. So so the industry is catching up, and the industry is catching up as well. And I think in certain cases it's pushing regulation as well. It's pushing, but I think the more traditional institutions definitely need to come together and look at the market as a whole, because it's going to be a David versus Goliath situation when the regulations do open up. I mean, even if you look at cryptocurrency and things like that, when I mentioned, we've seen instances where, we now certain institutions here or shops here in Sri Lanka are accepting cryptocurrency, but legally we cannot transact here in cryptocurrency. But that's because actually, there's a lot of, we are a tourist dependent country, and they come in with cryptocurrencies and they want to transact with that. And so we are not really isolated. Our regulation needs to open up if we are a global economy.
I mean, yeah, just to add what Thainda was saying, there are a lot of people who are outside of Sri Lanka who invested in crypto. who need to spend it. We should help them spend it. I mean, if you look at MasterCard, Visa, they're integrating with that world, right? I mean, you can, in Southeast Asia, with your Visa or Master, swipe and yeah, the merchant gets dollars or ringgit or what have you, but they're spending the crypto and they travel. So, let's help them spend some of that. I mean, I think we see, yeah. So there's, I think, a lot we can do. Yes, sure. I can't see us opening up a capital account anytime soon. We'll be realistic, but even within that, like real estate, like how do we participate in real estate? I mean, it's very expensive to buy land in Colombo 7, so I can't buy it. But I'd like to be able to participate in that. Can't someone do a REIT or some sort of tokenized thing? Commercial real estate, I'd like to participate in that. I can't buy a massive building. But so in the end, we are supposed to serve the people, right? So why can't? So there are things we can do. We can inspiration we can take, and I think we hopefully we'll start seeing more of that. But yeah, I mean, look, open banking, digital KYC, absolute base layers. We really need to move quick on those things.
So brilliant, Lalin, Tharindra, thank you for that influence and for that ideas. I mean, we understand we are a bit slow to grow, but we should go there, and our regulations should support that. And you have already, gentlemen, influenced this audience that they are, asking a lot of questions as well as they are giving a lot of suggestions. And there's a good chance that we have a follow-up session on this, because a lot of people are asking for a follow-up session to ask many other questions, and I'm pretty sure they have kind of opened their mind about this new reality where things are actually happening at the moment. So I'm like guessing that there can be another discussion on this, follow-up discussion on this. Just to ask a very quick few, we take probably 1 or 2 questions, considering that we have already passed time. In our Sri Lankan typical mindset, we have this fear of pyramid schemes. Lalin, Tharindra, we have heard bad press about pyramid schemes. Is crypto, blockchain, all these things really pyramid and illegal in Sri Lanka?
Some of them for sure, absolutely. I mean, hey, pyramid schemes, horrible things. You mentioned that to me. I run a mile myself. Look, there are plenty of examples of ICOs where guys have put up a totally nonsensical white paper, collected some cash or some really, innocent poor people, and then just buggered off. And you never see it. I mean, absolutely. Some of this, which is why it is. I mean, look, if you that's absolutely the kind of thing you need the institutional investor in. You need someone to spend time. I'm not going to read all that stuff. Absolutely. Can you find scams? For sure. The difficulty is sifting through the good stuff and the bad stuff. But yeah, I mean, absolutely you can. I would say, so blockchain is not a pyramid scheme. It's a piece of technology. Can you use it to build a pyramid school? Absolutely. Have people done so? Absolutely. So, like any tool, it can be used for good and can be used for bad. It's just, one can't ignore the tool. It's a thing. And some good stuff's going to come out of it. Some bad stuff's going to come out of it. We are in the early stages, so we're having trouble sifting through them, but we're getting better at it, I think. But yeah, I mean, could you have pyramids? For sure. Absolutely.
Tharindra, I think you can probably answer that question as well as add some final thoughts onto this session.
Yeah, I think Lalin covered pretty much my thoughts on that as well. I mean, due diligence is absolutely required when it comes to this. I mean, it's a very highly unregulated worldwide when it comes to cryptocurrency and things like that. Not many countries have any kind of strict governing laws or anything like that. Like if somebody steals your bitcoins, you can't really report it to the police. So it's still, like Lalin said, the wild west area. So you definitely need to watch yourself in terms of how you navigate this space. I mean, like there's hundreds and thousands of cryptocurrencies and tokens and things like that. You can get absolutely lost in it. So either you spend day and night studying that space and you're into it, or if you're just playing with it, it has to come with it'll come with the element of risk with any kind of investing. It does. But so that's where regulation, I mean, we speak it's not enough, it's not there, but then again, it's there to protect the customer. That's why, and sometimes it can be like a overbearing mother, maybe, it's not stifling all the kids and not letting them play. But, it's stopping the kid from falling into the pool, and, it's all that. So, yeah, that's my thought on it.
Thanks, Tarinder. Thank Lalin. I mean, I just thought of, imagine that you go to a police station and want to complain a situation on lost Bitcoins. It's going to be brilliant. Thank you, Tarinder. Thank you, Lalin, for spending this valuable time with us. I'm pretty sure the audience enjoyed, and there's a request from some of them to share some material from this session to so that they can go home and do a lot of work. I'm pretty sure there are a lot of information, and probably I'm pretty sure SLASSCOM will be influenced to cater more information in this aspect, because we are seeing a lot of interest from our guys. I mean, as you said, the country is like reawakening on this arena. We are not sleeping and we are not idling, obviously, on this arena. And this is a good sign, I believe. Again, Tarinder, Lalin, thank you very much for opening up the context, so that people are now willing to take more into their cups. And I know you have had a lot of experience and you have a lot more to share, but the time comes here. And thank you very much for speeding things up, answering a lot of questions from me as well as from our community. And gentlemen, ladies, those who joined us through Facebook, through Zoom, thank you very much for being here through all these difficult times. We know a lot of people, a lot of us are having this difficult time period. Things are changed. We call this new normal, but still we are here. We are improving ourselves, improving day by day, and going to the next step. Thank you very much for that commitment and that self-improving development idea. And let's do this as a country, and let's move to the next step. Having some hopes about the next session onto this, and hoping to invite the same panel and many more to bring you more news on this, while thanking our eminent panel. Thank you very much, ladies and gentlemen. Stay tuned for SLASSCOM Facebook. They will be providing more and more information. This is not just about providing you more information, but to improve and expand your context. While saying that, thank you for joining again. Stay safe until we meet again. Thank you, Lalindra. Thank you, Tarinder. Stay safe. We'll see you again.
Thank you, guys. Have a good evening.
Thank you very much.